What's going on, everyone? 360 Digital Closing Bell here. I am your humble correspondent, Michael Tanner, joined for our week look back podcast, episode number 26 here on this beautiful June 16th. We are coming to you from an undisclosed location here in Denver, Colorado. As always, I am joined by the executive producer of the show, the purveyor of the show, and the director and publisher of hands down the world's greatest website, oilandgas360.com, Stuart Turley. How are you doing today?
I'm doing fantastic, Michael. We are having a great time today, and it's going to be the weekend soon.
It is the weekend soon. If you are listening to this, it is Friday morning, but a little inside baseball. We are recording this Thursday afternoon, so if we do miss anything on the news deck that drops tomorrow morning, please, we will make sure to update the podcast. It's been a wild week. We've had so many different stories drop. I'm going to toot my own horn when we whip around the oil patch here in segment one. A lot of the stories that I was looking on happened, so we'll toot my own horn there. No pun intended. We'll also check in on the crude oil levels and the EIA, 600,000 barrel drop for crude oil production this week. Unbelievable for crude oil inventories. And then, as always, we'll check in with the 360 official, non-official fund. But first, I need to tell you about my friends at Adamantine Energy and really what they're doing for the energy space. This company is a specialty ESG and social risk exposure company. And what they're doing is they're helping executives answer the question, what is social risk? And really, it's not just community opposition to development projects anymore. It's everything from the success of the divest from fossil fuels movement to investor engagement on your ESG programs to all of these individual states setting extremely ambiguous climate and decarbonization agendas. Social risk seems like it's everywhere now, moving fast and multiplying like zombies. They have that in the read, multiplying like zombies, I'm telling you, and your company needs a strategic partner to help assess and prepare for that. Please, they're led by Tisha Shula, who's probably the greatest person I know. She's the former CEO of the Colorado Oil and Gas Association. I've had the pleasure of knowing her for almost a little over a year now, and I tell you, every time I talk with her, I learn something, and I just leave with a great interaction. She is an awesome person, and she leads Adamantine, helping companies just like yours expose your exposure to social risk. Talk about a tongue twister right there. She's going to help you with all of your options and how to create on how to, what your peer companies are responding to, and even the opportunities that social risk can actually create for your business, which is something I don't think a lot of people think about. I think a lot of people think it's a net negative on their business. Like, no. In today's environment, can be a net positive when you talk about the investment that come in. So it is important not to forget about this. If you are not already reading Tisha's weekly emails on what's on the horizon for the oil and gas sector, please do that now. Your competitors are reading it. You can check out all of that stuff on oilandgas360.com. Yeah, and I think before we do that, let's go ahead and we need to do some quick clerical work here. Please follow this show, iTunes, Spotify, Entercom's YouTube channel. Check out Entercom and Oil and Gas 360 on all of the major social media platforms. Check out the Oil and Gas 360 news desk available on the world's greatest website. You should also check out the Energy 360 Network, which is the best thought leadership podcast. So many interviews that we have lined up. What's on the docket for us?
Well, we're releasing Jeffrey from this week. We're going to release him next week. We have several others coming up. We have the president and CEO of Goodrich Petroleum dropping out next week.
And I don't want before you move on, I need to just toot your horn. We're about to toot my horn in segment one because I sort of called some of these words. It's time to toot your horn. I think Alex Epstein was probably our best interview. This quite substantially was our second best interview, and it was a one-on-one between you and Rob, and you absolutely murdered it in a good way.
Well, thank you very much. I'm learning from you.
Interviews aren't necessarily my thing. I'm much better when you just do this. You stick a mic in front of my face, and you just let me talk. So that's the best thing. We're going to have so many great interviews coming up. I interrupted you. We got another one coming next week?
Yes, we have Andrew. He is the CEO of Data Gumbo.
Oh, yes, we got Data Gumbo. I'm excited for that one.
Yes.
Can I hop in and be the interviewee? Can be the interviewer?
Absolutely.
I'll slip in on that. But no, Data Gumbo is awesome. They're doing some really, really cool stuff in the blockchain space, so please check that out. With all that being said, sorry.
Also, Alan, the founder of Drilling Info in Inverus. So,
Oh yeah, that'll be a wild interview. He's got a lot of stuff, and he's a great follow at the Crude Awakening on Twitter. By the way, if you're interested in a good EFT Twitter follow, I'd recommend following Alan Gilmore. I think with all that being said, it's time to move into sort of covering what happened, this week. It's been a wild week in oil and gas. I know we say that every single week. We sound like a broken record, but really it was just some absolutely crazy stuff that have happened. If you'd listened to my podcast on Monday, one of the big themes that I brought up was bankruptcy. There was a bunch of different reports about what was going to happen. The first story that we ran and that happened, really late Sunday night, early Monday morning was the CRC. As we know, June 15th was their basically their drop dead point for whether they were going to pay some of their, basically in their 30-day grace period was up to either make interest payments or declare bankruptcy. They were given a 15-day extension. So the dead live on just another 15 days. I'm sure they're doing specific talks to clear it up, but that dropped Sunday night. So I mean, already by Monday morning, before the podcast even dropped, my sort of prediction was sort of coming true. Then Monday morning, we had Extraction Oil and Gas specifically declaring bankruptcy, which is, for all of you out there, Extraction is a specific DJ player. They filed Chapter 11 to do a comprehensive restructuring. They've got about 9. What is it? Let's look at here. They've got they're basically looking to these. I'm trying to look at the pricing here. Okay, here we go. It was about $600 million in debt, which is not good because they only have access to about $15 million in liquidity right now. They skipped 30 days ago a $14.8 million interest payment to sort of buy more time, and it just didn't happen for me. And I was pulling for Extraction. As everybody knows, I usually wear my Minds baseball polo. Matt Owens is a Minds baseball alumni. Hate to see them go under, but when the business model is not solid, it's just what happens. So another one bites the dust in Extraction.
That's not good.
No, not good. Because then, not good that my prediction's coming true. And then Tuesday, what happens? Chesapeake comes out and says basically the same thing. They are about ready to file bankruptcy. They're in the talk. They're wrapping up negotiations to secure $900 million, what's called debtor in possession loans. And I think this is what's interesting. I think why a lot of people talk about, Chapter 11 negotiations. Well, you can't just fold the company. There are people on payroll. You still have some sort of payments to make. So a lot of the times before you can legally enter, not a lot of the times, every time before you enter Chapter 11 bankruptcy, you have to have financing plan for how you're going to sustain yourself through the operations. They're looking at acquiring about $900 million in that debtor possession loan. But what they're also looking to do is roll up some of its existing debt and sell it off and roll that up to give them closer to about $2 billion in funding. And I made this joke on Closing Bell Tuesday, but as everybody knows, I hound people that trade on Robinhood, and you're more welcome to trade on Robinhood. But Robinhood has become sort of the darling and the mystery of energy finance and specifically financial Twitter. And one of the big things that Robinhood you can track is what shares people on Robinhood are buying. And Chesapeake was high. Chesapeake was extremely high. And a lot of times you see bankrupt companies trade very high and become very volatile in the amount of volume because people want a slice of the pie. They think if Chesapeake goes bankrupt, I'd love an office. I'd love to be a part owner when this thing gets rebranded. And what's funny is that never happens. And the company who's actually going to be taking over Chesapeake is probably the largest retirement mutual fund holder, Franklin Templeton. So all of these 10-year-olds who were sitting in math, who were sitting on their Zoom conferences, finishing up school, trying to trade Chesapeake, joke's on you, your great-grandma just got handed to the company. So it's going to, and they get it for they're going to take over the about $7 billion that's going to be left over in outstanding debt. They're able to get, like I said, that $900 million debtor in possession and then about $1.2 billion in more funding to lower that debt and then hand it over to Franklin Resources. Another School of Mines guy, Doug Lawler. I mean, not that he didn't play baseball, so I don't take too much credit for this one. But rough week for School of Mines guy. So we're having a solace this Friday.
Michael, I'm glad that you're competent.
Yeah, who knows? Maybe I'm about to go crazy or something. Who knows? We're having a vigil up at the M. Anyone who's listening to this, you can meet me up there tonight. We'll have a little vigil for the Mayan CEOs getting axed here. But, I hate to say I was right at the beginning of the week when I mentioned bankruptcies was going to be the lead story this week. I don't like being right on that, but unfortunately it really was. I mean, those were really the three major things that were us. Stu, we ran an article outside of bankruptcies, it was today or yesterday on the JP Morgan Energy conference, and some of the wild quotes that came out.
Yeah, go ahead.
Yeah, I mean, this is just, I didn't know if this is the one that you wanted to bring up on sort of the expansion of oil production.
Oh, on U.S. shale companies?
Yes.
Oh, yes. Thank you. Okay. Yeah, U.S. shale companies are increasing out 500,000 BPD by the end of the month. And so that's a kind of a cool thing that they're starting to pop back in. Now, just because you have increase in production, it's not in the shale area until you start putting in rigs, and it just doesn't turn on overnight. So even though we're increasing it, it's still going to take a while.
Yeah, the declines, a lot of this stuff is going to be interesting. And that was, that was crazy. And that was by Devon Energy CEO David Haggard. That was his quote.
Yes.
And at the same time frame, S&P Global Platts drops an article saying Devon is cutting even more production. So it's really funny to see sometimes the balance between these companies. But yeah, this is, 500,000 barrels. That's a lot, considering we just saw 600,000 barrels last week get ripped off.
Right. And then Rystad in the same article says another 400,000 could be added to the market between June and August. Those are price
remember when
numbers.
I was skeptical of the 40-50 million barrel supply or demand shifts. I'm starting to feel the same way about some of these shut-in numbers. I mean, we're talking about, I've seen numbers down at like 6 million barrels for shale oil production, bringing U.S. oil production all the way down to 7 million barrels. Like, what? Like that, as much as I was skeptical on huge demand, I'm gonna lay my claim. I'm a little skeptical on all of this shut-in stuff. Like, I don't think it's all gonna happen. It can't.
But you're on the shale treadmill, and the rigs are down.
Well, as we saw this week, 2 of them are about to get kicked off. The 2 of them just ran out of treadmill.
Yeah, but when the shale drilling is down, it's not easy to pick back up. And that's going to take the U.S. out of the energy leadership.
Yeah, and speaking of rigs, I mean, this is a theme we've been harping on this podcast for a while, is that rig count specifically is going to be is a big indicator of new oil production coming online. It's not just new oil production, but the growth of oil production, because as we know, oil's decline. You're making 10,000 barrels today. You're not making 10,000 barrels tomorrow. I mean, some declines are better than others. I've seen some very, very nice, soft declines, but generally you get hard rippers. Some of these shales start really, really high, tail off very quickly, and level out at a decent level, but you're making all of your money up front. And so we talk about rigs a lot, and one of the basins that was really reliant on rig production, and specifically frac production, was the Bakken. This is something that we also covered in our call with and our interview with Rob McBride. You can check that out on the Energy 360 podcast. Why the Bakken has been getting hit a lot harder than some of these other regions. First off, you're going to bring this up in the international news list, but just the cost per barrel is slightly higher there. You have to frac there. Some of your outside expenses are there. I mean, right now, I'm looking at some statistics. This is an S&P Global article. North Dakota oil production has pretty much sunk to 1.5-year lows, and you've got 10 rigs. 10 rigs. I only need 2 hands. I don't even need to take my invisible socks off. 10 rigs and 1 frac crew out there. And one frac crew. It's unbelievable. The amount that's getting cut right now, they're getting hit so hard. A lot of it has to do with, like I said, high oil or the high cost, and just where the oil is going. I'd encourage you to check out that Energy 360 podcast by Rob. He does a much better job of talking about some of the supply chain issues. And that's really what Enver's found. It's not oil production from an upstream side that's the bottleneck. It's when you get down to the downstream and what the refiners are interested in. And just the blend that comes out of North Dakota is just exactly not what the refineries want right now under all of this stress load. So it's sort of funny in a way that it's not the upstream part of the Bakken that's really causing the hurt. It's the one being affected by the refineries changing a lot of different stuff. So, if you were laid off and then you were blocking work, our heart goes out to you, because it's just, you got hit a little harder just due to some of the supply chain issues. And again, we've used the word unprecedented too many times, but we'll say it one more time. It was just an unprecedented event. Who knows if we'll ever see this. Stu, what happened to the international news desk this week? We had lots of great stories.
Oh, we had some craziness going on. One of the articles that we have out there is break-even crude oil prices are one metric for the economic constraints facing OPEC plus members. This is really a critical article for folks to take a look at, because when you take a look at a break-even number for a country, it's going to tell you a lot about what they are willing to do in order to either survive or pay.
And there's some, read them off, because there's some really interesting numbers in this article. And this is like you mentioned, Rare Petro article. They do great research. Wild stuff.
Yep. Wild stuff. In Saudi Arabia, their number is $63 a barrel, because they have so many people on government payouts.
Yeah, so that's one thing before we get into these numbers. You bring up a good point. All of these numbers are not actually what their actual oil and gas drilling costs are. It's baked into it what, most of OPEC relies on oil revenues to fund government stuff. So this is the break-even point. The governments need to balance their budgets.
Exactly.
Imagine that's a scary proposition right there.
Yeah, I have some sources on Russia that I've been reading up on, and Russia is $41 a barrel, but their military spending is so far out of debt right now. They are in debt into their eye holes with their military. And so they're in some major trouble, and that $41 a barrel is not even probably accurate anymore. Iraq is $54 a barrel. Kuwait is $45. Qatar's $39. Kazakhstan is $63. Mexico is $33. So when
Mexico is hedged very well on top of that. So Mexico has a very big advantage on that, being only that they need oil at 33 to balance government revenues. Whew.
But China has got so many money problems right now. They got caught again this week, Michael. They got caught again going through and buying Venezuelan oil outside of the sanctions again. So last week they were threatening to ban a bunch of tankers and blacklist them from even being used. Now the Chinese are still doing it again. This article points out that money makes the difference on how far countries will go to cheat the system.
Oh, and China's cheating? Well, it's news to me. Wow. Whew. I learn something new every day on this podcast. The one, this is sort of a quasi-U.S. International story. Stu ran this on the international news desk for the closing bell today. Was Schlumberger taking a $1.4 billion charge for restructuring their whole assets? Why that's both an interesting story is that's from the executive level. That's from Schlumberger top level. But if you've been following the podcast, you know that oilfield services on the international side have done well. Schlumberger quarter one last year was up 16% in revenue, even baking in some of this. So this restructuring, $1.4 billion of restructuring, that's completely from downsizing on the U.S. side, and shows that Schlumberger, as Stu mentioned in the show, it may not be looking to leave the U.S. entirely, but shift its focus to become much more of an international focused company, especially as the international stuff moves forward. So when you see Schlumberger taking a $1.4 billion charge, that's unfortunately a direct consequence of the U.S. energy market, not necessarily a factor of how the international scene is playing out.
You bet. You got that right. One last article from the Sydney Morning Herald this morning. Chevron is looking to sell its 1.6 34 billion Northwest Shelf venture right off of Australia. They've had that actually their 30 years is a very profitable LNG program, and they're doing it so that Chevron can focus more on renewables. It's amazing Capital is being tied to renewables as well as performance metrics. So
yeah,
that's
it's
another one.
everything is getting tied to ESG and all that jazz. And I encourage you. We did a really Entercom did a really nice internal. We did a really nice internal discussion on ESG and how it touches all different aspects of your businesses. I encourage you to check that out. Anything on the news side? I mean, this was bankruptcy, big storyline this week. Bakken unfortunately is getting hit hard. Some great internationals. Is we missing anything? Is there anything we need to keep these guys up on before we shift to oil?
One last thing, we did put that Rare Petro article out. That's actually this Rare Petro article is covering post-COVID global demand series. It's part one. Kevin over at Rare Petro does an outstanding job covering this out. Construction, manufacturing, transportation, air travel, real estate all have demand impacts on oil. Here's the problem. COVID's wiped out a ton of that. Here's where we're going to really go through, and Kevin talks about fantastic data on recovery and demand in this article. It's on the news desk.
Yeah, check it out. It's also trending on oil and gas news. Just type it on Google. You'll be able to find it quick. That was cool to see. But I think it's time to go ahead and just shift into the oil levels for the week. As always, this segment is sponsored by Sandstone Capital Group. These guys do insanely good research and provide all of the levels and the stories via their energy solution. If you've listened to this podcast before, you've heard me talk about them, just give them a call. They're great guys. 949-561-1818 or check them out, sandstonecg.com for all of your research needs. When we look at sort of the themes, obviously we covered a lot of the stories, so I'm not going to kind of go over a lot of the stories. Really, when I'm looking at specifically the levels for the week, it was a bullish week. We started at $34. We're all the way up at 39 now, so it was a really good week for crude. But we are still range bound. One of the big things I mentioned was that 30, probably that top level, 39.91, all the way down to probably 33.35 was where I set that bottom limit. We did crack a little bit below that, but if you're looking for sort of a range bound trade, those I'm looking at two really, really good levels. Point of control for the week, 39.01. So as we continue to just move that point of control up, that's one of the biggest things. Week to week tracking where that point of control is going to tell you a lot about where the sentiment is on a lot of the big volume. When I look at the levels, 35.35 is probably our lowest target now. I know I mentioned 33.45 might be the lower end of the range, but I'm probably going to go ahead now, just looking at the way the volume has shifted out over the past 5 years, move that up. Probably your floors, 35 even, maybe 35.35. We have a really, really nice volume there. 36.78 is probably a level that you could get in a nice long position if you're still necessarily bullish and you think that top range is ready to go. 38.18 is a really good level, was last week's point of control. This week's point of control, 39.01. Really that top range, 39.91. I mean, right now, the way I have it, I would move into the week. And as we know, oil's closing here. Oil just closed up here if you're listening as we record this on a Thursday afternoon. I'm probably short in oil when the markets opens here. Not that I necessarily think it's going to be a bearish day. I think what you can do is when the market opens, remember, market opens at 4 p.m. here. So in about 3 minutes, we're going to see oil open. I could see a depression to maybe a little Friday rally. But if we finish $38, $39 tomorrow, I'm going to be very bearish moving into next week. But you'll have to check out the podcast on Monday for that. When we look at the EIA and the crude inventory numbers, I mean, just a wild storage week. So, I mean, first off, you had Cushing stocks drop again, 2.6 million barrels, all the way down to 46.8. If you go to the EIA's website, they'll give you the 5-week range, the 5-week moving averages. We finally dropped back in below, which is really, really good to see. Just from a statistical standpoint, distillate demand was up to 3.6 million barrels per day. That's up 300,000 barrels. Gasoline demand was pretty much flat, though I did see some interesting gas buddy data talking about consumption has been up week over week. So if there's a really good, if you're on Twitter, his name's, I'll link it in the show or put it on the news deck. It's this guy that gives really, really great gasoline demand information on time, does it week over week. I don't want to butcher his name, so I'll link his Twitter in the show notes and you guys can check it out. But gasoline demand, at least consumption is coming, but it was odd to see the demand stay flat. But this was the craziest number. Total domestic production down 600,000 barrels to 10.5 million barrels. Kind of a slap in the face to what we heard today from all of these CEOs about, hey, we're turning back on 500,000 barrels, 10.5 million barrels. That's the lowest since March 2018. Now I don't even know what I was doing in 2018. It's not even that long ago, and I couldn't even. That's 2 years ago. Woo-hoo!
You have a hard time figuring out what you did yesterday, Michael.
Yeah, or 20 minutes ago. So I have no problem with it's definitely a thing. So it's just going to be interesting to see, the sentiment, remember there's the signal and the noise. And sometimes the signal is not what the actual noise sounds like. The signal seems like people are going to start turning back on production. We will see. I am scared. This is a big number. 600,000 barrels is a wild number. So I see where some of these, the Rystats of the world, these guys, these projections, these guys who really do projections of the world, why they might say, hey, let's get that oil production down. We might see 8 million barrels, from 10.5. Yeah, I'm skeptical. I think I think we begin to turn around a little, but I'm going to be very interested in what happens next week. But 600,000 barrels, I think that's. I don't have these numbers in front of me, but I would wager to bet that's probably the biggest week-to-week drop we've had in 4 or 5 years.
Well, I'll take a note. Let's take a look at that. I
bet you're
right.
Definitely. Take a look at that. Anything with oil, Stu, before we move on here and cover the 360 fund.
It's going to be a rough ride for the next few bit, but we'll be there covering it.
Yeah, it'll be very interesting to see what happens tomorrow's trading day. Specifically, we're listening to this on Friday, what oil's doing, because specifically when it closes, we'll give all of our biases for what we think is going to happen in the week upcoming. That'll drop Monday before the market opens. But I think we just go ahead and shift into the covering the 360 official, non-official fund. Before we do that, as always, the lawyers make us say this so we don't get sued. This segment is for entertainment purposes only. Everybody on the show, i.e. me, Michael Tanner, Stuart Turley, we invest for our own accounts. We do not manage any outside money. We do not give investment advice. We do not offer securities or have any involvement in the regulated side of the industry. Remember, investing is risky and you can and will lose your entire principal. That being said, Stu, how's your side of the portfolio looking?
It's doing mediocre. My Duke is just still kind of hanging in there. LNG's still kind of hanging in there, but my Inphase is starting to kick back in. Now, Inphase is the chip manufacturer for solar. Mm-hmm. And it looks like I may have bottomed out in the chart showing a buy again. So I'm glad that I've got a good run coming up on that one. So
how's Tomcat look?
Tomcat's doing some kind of fun stuff. He's doing some Devon work and doing some shorts, some calls, some puts. He's getting
on the options game. I don't recommend that. If options, know what you're doing before you invest in options. But if you know what you're doing, options can be a great leverage tool for you.
He is having a blast.
He's in Devon, right? Interesting.
Yes.
He hasn't been listening to he must have taken a couple weeks off listening to the podcast.
Yeah, he's got another one here. Let me see if I can grab it real quick. RRC is another one he's in. They're down
Range Resources
today. Yep.
Well, he's long natural gas. He's going along with the experts. I like the move.
Yep, he's in there. So he's playing it big.
I love it. My side of the portfolio, as always, we're long-term in natural gas at Bonanza Creek. The problem is we're in at $1.79 for our natural gas contracts, and currently natural gas is trading at $1.63. So we've eaten it in the shorts there. We'll be holding out a lot longer, but it's okay. As always, Bonanza Creek, we were in at $14.89. So they had a little regression all the way down to $17, but we like them as a long-term cash flow position, and we're going to keep them in. In terms of the day trading side, I'm probably going to enter next week on a bearish sentiment, considering we're $39 right now. And I think we're going to have a depression back down to 35, but it'll be very interesting. I will kind of get these levels figured and let you guys know, but probably we're going to be entering with a couple of short positions on oil as we move into the week. But as always, you have to tune in to the Monday podcast to do that. It's about 30 minutes here. I mean, we'll keep it short and sweet. We covered a lot of the good news items today. Got some of the levels kicked out. EIA does a great. Are we missing anything, Stu? Oh, what's Kreskin got?
Kreskin, I think we're going to hit 34.28.
34.28. You heard it here first, people. And you did. You heard it here first, even if it at some point it could trade at that level. And when it does, remember, you heard it here first. But with that, we're going to go ahead and let you guys get out of here and get back to work. Thank you for checking out the 360 digital closing bell. You have our permission to end your day and start your weekend early. We'll see you guys on Monday for the digital ticker.